For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has introduced yet another noteworthy development this month, continuing its trend of high-impact collaborations that further cement its reputation in national defense and artificial intelligence. The company is now actively participating in a new effort known as Warp Speed for Warships, a United States Navy initiative that aims to drastically increase the speed at which naval vessels are produced. This program is expected to modernize shipbuilding processes and enhance operational readiness, with Palantir's technology serving as a foundational component. The defense sector remains one of Palantir's most influential partnerships, and this latest endeavor only deepens the company's role in national security strategy. Earlier this year, Palantir's stock price experienced a decline after reports emerged suggesting that the Trump administration was exploring an 8% reduction in the national defense budget. This led to investor unease over the potential impact such a cut could have on defense contractors and technology partners like Palantir. However, over the following weeks and months, those concerns appear to have eased significantly. The fears around budget reductions have largely faded into the background, replaced by renewed confidence in Palantir's continued importance to the government and military sectors. Palantir's performance in the stock market has been nothing short of remarkable. So far this year, the share price has climbed by approximately 97%. When measured from the beginning of the previous year, that number becomes even more impressive, with the stock having grown by more than 400%. These are the kinds of gains that are impossible to ignore, especially for investors seeking growth in artificial intelligence and defense-focused technology companies. Despite these eye-catching numbers, there are some valid concerns regarding the company's valuation. Leading investor Nauman Khan has been vocal about this, pointing out that the current share price reflects extremely high expectations. However, he also notes that Palantir's tremendous growth, deep government relationships, and rapidly expanding customer base provide solid reasons for optimism. Khan, who ranks in the top 4% of all analysts tracked by TipRanks, maintains a bullish outlook based on Palantir's strategic momentum. Khan has remarked that Palantir is clearly surfing a major wave of success, and he believes that the company's involvement in the Warp Speed for Warships effort is just the latest example of how deeply Palantir is embedded in the US defense network. This is not just another contract or government deal, but rather a continuation of Palantir's role as an essential partner in national defense technology. He further states that Palantir's dominant position in providing analytics tools to the government sector, combined with its contributions to the Warp Speed initiative, signals even greater opportunities ahead. Khan expects continued expansion not only in defense applications, but also in the commercial sector. According to him, this growth will likely result in rising earnings and higher levels of profitability over the long term. Another important point that Khan highlights is Palantir's unique approach to deploying its technology. The company embeds its Foundry platform and artificial intelligence platform deeply into the core processes of its clients. This deep integration makes it difficult for customers to switch to competitors, creating what Khan describes as a defensive barrier that is nearly impossible to breach. This kind of technological embedding creates long-term value and client retention, which are both critical for sustained revenue generation and market dominance. However, Khan also offers a word of caution. He stresses that while Palantir's current valuation reflects strong confidence from investors, it also comes with a heightened level of risk. The company's market value is significantly higher than that of its industry peers, and this discrepancy means that any misstep, however small, could result in a major correction in the stock price. A single disappointing earnings report or unexpected obstacle could cause analysts to reevaluate their outlook, potentially leading to downgrades and a slide in valuation. For now, Khan remains committed to his position in Palantir. He is continuing to recommend the stock as a buy, but he advises fellow investors to stay alert for any changes that might impact future performance. He explains that while he still believes in the long-term upside, the company must continue executing well in order to justify its current market value. Any near-term issues such as missed revenue targets or delays in contracts could cause the stock to lose its upward momentum. Meanwhile, analysts across Wall Street are taking a more cautious stance. Although there are bullish voices like Khan's in the mix, the overall consensus on Palantir is more reserved. Out of the analyst community, 10 have rated the stock as hold, while only 3 analysts recommend it as a buy. Another 3 have assigned a sell rating. This results in a consensus rating of hold, which effectively indicates a neutral outlook on the stock. The price target set by analysts for the next 12 months adds further complexity. On average, experts expect Palantir to be trading at around $104.85. Compared to its current price level, this suggests a possible downside of nearly 30%. This projected decline implies that while the stock has performed extremely well in recent months, there may not be much additional room for growth in the near term unless Palantir surpasses expectations or secures new transformative deals. Essentially, Palantir Technologies has partnered on a new defense effort called Warp Speed for Warships, aimed at speeding up shipbuilding for the United States Navy, further strengthening its role in national security. Although the company's stock took a hit earlier this year due to concerns about a potential 8% defense budget cut under the Trump administration, those worries have mostly faded. Palantir stock has climbed by approximately 97% since the start of this year and over 400% since the beginning of last year. Despite warnings from top investor Nauman Khan about the company's high valuation, he remains optimistic due to its strong government ties, rapid expansion, and deep integration of its software platforms like Foundry and artificial intelligence platform across client operations. He believes that these advantages create long-term value, though he also cautions that the stock's premium pricing leaves little room for mistakes. Wall Street analysts are more cautious overall, with 10 rating the stock as hold, compared to just 3 buy and 3 sell ratings, and the average 12-month price target of $104.85 implies a possible decline of nearly 30%. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.